affordable for everyone. We're proud to offer high-quality, rechargeable hearing aids starting at just $98. Clear, comfortable, and ready to use right out of the box. And here's a study worth hearing. Research shows that wearing hearing aids can reduce your risk of dementia by up to 61%. Join over 1 million happy customers and hear the difference today by going to audionhearing.com. That's AUDIEN hearing.com.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM, Concord, Boston, the Money Matters Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom, my to-do list is full.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has information to help you and your family live a healthier life.
Visit goredforwomen.org/momlife today.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, and Tucker with you here, and we kick things off today on a busy day. We got a lot of economic data that we're going to work through. We've got a couple interesting quotes that I want to get to later on in the show on a couple items. But we start things off back in the Strait of Hormuz, where we've been for the last 3 months now. And got to tell you, Mike, if you had told me, like if you were sitting here on February 26th and you said, hey, Chuck, the U.S. and Iran are going to get involved in a shooting war. The Strait of Hormuz is going to be closed at least 3 months. What do you think the price of a barrel of oil is going to be?
Not $90.
Not $90 is my answer.
Was this one of those, maybe it was just because of where I was and the attention I was paying to it, but this was one of those moments where when it happened, I remember exactly where I was. I was sitting in the lobby of a Marriott hotel in Worcester for my kid's hockey game, and I was sitting there eating my breakfast, looking at the TV, being like, oh, this is what's happening right now. And there's a few of those moments in my life that like really stand out, but this is, one of those events where I'm sitting here like, oh, got it. Went to bed last night, and this is what you're waking up to on February 28th.
So here's the deal, is I don't know exactly where the price of oil is going to be at any particular point in time. But I do know that what we are seeing in terms of the drawdown of U.S. inventories points towards them becoming problematic as we go through the summer. To this point, I do get questions from people on a pretty regular basis, like, hey, Chuck, like, I hear what you're saying about, the concerns about inventory levels. I see the same thing, but why are oil prices still where they are then? And there are a couple factors. The first that has come up in the last week or two, China has cut their crude oil imports by around 5 million barrels a day, which is a huge import cut. Now, there's all kinds of speculation as to how they're doing this. Some of it, the speculation is that they are releasing from their strategic reserves through underground holdings that they have, just like the U.S. does,
Sure.
Where, hey, they don't necessarily have to report what's going on there. It's not observable by satellite the same way that above-ground inventories are. And Okay, maybe they are, pushing through these big strategic reserve releases without us knowing. It's possible. Another thing that has been rumored is that they also might have significant reserves that they've built up of refined product, and they might be releasing those. The other piece that I've heard is that they may be instructing their refiners to shift the mix of what they are producing, dramatically underproducing things for petrochemicals like plastics and stuff like that, and instead producing more of the refined product they need.
It's also possible a portion of their previous imports were going towards reserves, and I would imagine not a lot of those are right now.
Sure.
They could have been filling reserves at that point in time, and they said, okay, that 10% of it that's going there is getting cut down. So, yeah, there's any combination of things that could be affecting that.
All kinds of stuff there. The big thing, no one really knows because it's China and all of their data is a black box, and we don't know how long they can continue to restrict imports to these levels. It could be weeks, it could be months, it could be years. I have absolutely no idea, and I'm not going to profess to know because I don't.
So China accounts for 5 million barrels a day of demand offline right now. U.S., another 3 was the last I cited?
U.S. is putting out another 2.5 to 3 million a day that they weren't previously. Not in terms of production. We're still producing about the same amount as we were pre-war. We're just exporting a whole lot more, and so our reserves are being drawn down between strategic reserves and commercial reserves, somewhere in the ballpark of, again, 2 to 3 million barrels a day, depending on the particular week and exactly how you're measuring. So you look at the data. Japan's also putting in somewhere in the range of 1 to 1.5 million barrels. So this is kind of bridging the gap that we have from a production standpoint. But the U.S. very much, we do know the math on this. We've covered it on this show extensively. Commercial stocks start to get into trouble as you get into late July to early August. Strategic petroleum reserve stocks start to get into trouble about a month to a month and a half after that. So there's very much a ticking clock that is out there. In terms of, the other big thing is why are prices still so low? Why aren't they rising in anticipation of this? Guys, I got to tell you, would you want, let's say that you are in an environment, Mike, where there are securities that are moving up 70% in the course of a month. Okay?
Yep.
And you've got other securities that are basically trading flat for the last 2 months.
Okay.
But that flat is also deceptive because there are huge, volatility swings from day to day. And you also have the single most powerful person on the planet telling you, I want the price of that to be lower. Is your risk manager at your, hedge fund or wherever you might be, is that person going to say, hey, why don't you get longer in the stuff that's moving around a ton but not going anywhere? No, they're not. They're going to give you a tap on the shoulder and say, hey, you want to trade crude oil right now? You got to do it at 1/10 of your normal size, and here are the stops that I'm putting in place, because when you have days like we did on Tuesday where, hey, you come in after the weekend and crude oil's down 5-6%, You can't employ any leverage with that or anything. You're just getting jawboned by, again, the president, the Treasury Secretary, the Energy Secretary. You can't fight against that.
You've also got a history of being burnt there. So, yeah, there's a number of different things that go into it.
So I'm very much convinced at this point that there is no one of any meaningful size who wants to take a long crude oil position right now, because their risk managers probably won't allow it given the volatility profile that's out there. And so it gets us to a point where the only thing that's going to finally cause price to move is when you start to get into the nitty-gritty of the
literal availability,
the actual physical availability of this stuff. What I can tell you, and I don't have the direct quote just because I'm not there, but this is right now, Bernstein has a big conference that's going on in New York City, big investment conference. and they get like CEOs from all kinds of major companies and this and that. And this is a quote from the ExxonMobil representative who's there today. Like, this is going on right now. So again, I don't have the full quote. I just have the paraphrased one. We're approaching unheard of inventory levels. I mean, really, really low. You can debate whether it's going to hit those levels in 2 weeks or 3 weeks, but once you get to that point, you'll probably see price shoot up. That's
from somebody who would seemingly have a fairly good idea.
Right, like you're not hearing this from me. This is like someone at ExxonMobil who is saying this stuff now. And so, again, I don't know exactly when this starts to matter, but what I do know is since the first week of this conflict, all I've been hearing from people is, like everything's going to be back to normal soon. It's going to be back to normal. It's 3 months now and we're not. We're at the point now where the cumulative barrel loss, even if you price in a recovery, of production over the next, 3 to 4 months, you're talking 2 billion barrels of oil that's not going to be produced out of the Middle East at a minimum. And again, like I
think
I really struggle with this because I know I sound like the crazy person just yelling into the wind, being like, "Hey, you got to watch out for this." But you got to watch out for this.
Yeah, and I think there's a little bit of misunderstanding from folks because I don't think...
I'm not saying that the economy's going to crash or anything. Like, that's not what I'm saying.
But I think what I am comfortable saying is that there is a misunderstanding on the average person on Main Street right now that we are feeling the price of this event at the gas pump and in oil prices. And I think the point you're making is we very much might not be. There are a bunch of other factors that are keeping prices lower than we might have otherwise expected right now, and the possibility of a further dramatic shoot up in prices is a very significant likelihood.
I also don't know what just happened because, so Axios now reporting, here we go. I'm glad that Bloomberg got on it. Axios reporting U.S.-Iran reached deal but need Trump's final approval.
And on that, equity markets shot up by close to
quarter
of a percent. Oil markets as we speak right now. Hold on, I'm still showing oil prices up for the day. That can't be the case anymore.
No, looks like we are, hang on, let's see where we are. Looks like we're back down in the 89 range, so about where we closed yesterday, in that ballpark. So we'll see what we get out of this. Again, I'm hopeful that maybe you get a deal moving because we are very much in a dangerous spot for oil prices the rest of the summer. Every day this goes without one. And so we'll see what this brings over the rest of the day. And as we get towards the weekend, maybe we get some kind of final approval here and we'll see what happens.
Yeah, I'm seeing 60-day deal to extend truce.
So I don't know what that means yet.
Yeah, nobody knows.
We'll have to see what we get, and let's take a quick break, and we will effort additional information on this as we speak.
Smart financial talk whenever you want. Find the Financial Exchange on YouTube. Hit that subscribe button and keep up to date on daily business news from New England and around the country. This is the Financial Exchange Radio Network. Long-term care costs can reach thousands of dollars per month and can put a serious strain on your savings. The experts at Cushing & Dolan often see families caught off guard by that reality. Without the right plan in place, those costs can quickly eat through a lifetime of your hard work. But here's the shocker. Many estate plans don't protect your assets from those expenses. The right strategy may involve specific types of trusts designed to help protect your assets, but timing matters. Cushing & Dolan has a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It breaks down some of the most common and costly mistakes people make and explains how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
I was 24 when I had a stroke.
I was 35 when I suffered a heart attack.
I was 46.
I was 62.
It's a fact. Cardiovascular disease is the leading cause of death in women.
But we can fight against our #1 killer.
Talk to your doctor about your risk factors.
Know your family history.
Learn the warning signs and symptoms.
Together,
let's go red for women.
Visit goredforwomen.org to learn more.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network.
Following up on something that broke just as we were heading to break from Axios here. U.S. and Iranian negotiators have reached an agreement on a 60-day memorandum of understanding to extend the ceasefire and launch negotiations on Iran's nuclear program, but President Trump has yet to give it his final approval. Two U.S. officials and a regional source involved in the matter in the mediation efforts tell Axios. The signing of the MOU would be the most significant diplomatic breakthrough since the war started, but a final agreement that tackles Trump's nuclear demands would still require further intensive negotiations. So we're going to have to see the details that end up coming out of this. Again, markets rallied about 0.33% on the news. They've subsequently given back about half of those gains. So we're going to have to see what comes of this. Obviously, any kind of framework to get things moving through the Strait of Hormuz again would be a major plus. Whether this actually does or not, I think is something that's an open question. Remember, when the ceasefire was... it wasn't signed. Like, there was no ceasefire document, right? I've never seen one. When the ceasefire was announced, one of the things that was announced during that was, hey, the Strait of Hormuz will be open. And subsequently, it has not been.
We're so U.S.-centric for, here I want to focus for a moment. Like, a big part of the pressure campaign on whatever is left of the Iranian government has been stopping traffic through Iranian ports and prohibiting items from coming or going. That has, by all accounts, the initial strikes on Iran did not do all that much economic damage, whereas now, after basically closing all of their ports for a few months, it is starting to add up. And so the question is, can you have any success in a nuclear negotiation or anything else if you are allowing traffic to flow? Because I kind of doubt the U.S. is going to be successful in allowing some ships to go, but stopping Iranian ones without, again, the strait being closed. So big questions remain.
There's also a pretty big caveat in the reporting here. Quote, U.S. officials claimed Iranians came back and said they had necessary approvals and were prepared to sign, but Iran has not separately confirmed that.
Sure.
So, again, we'll see where this goes. Maybe there's some progress here. Maybe there is. I don't know. I'm hopeful that there is. And anything that can get traffic moving through the Strait of Hormuz would be a positive for the world economy. Again, the devil's going to be in the details on any of this, and we'll see what we get.
It is an interestingly small move in both oil and equity markets.
Well, here's the thing. When you've been, saying for the last, the first rumors were on, I think it was like the 8th or 9th of May that we were hours away from a deal.
Yeah.
If you have gone to that well a few times, how much more rally can you get at a certain point?
Right.
Let's see. Let's talk about some of the data that we got today, starting with the big one, PCE inflation data, personal consumption expenditure, came in a touch better than anticipated on the core PCE price index, which is the one that really matters to the Fed. Came in at 0.2% versus expectations of 0.3%. The unrounded number, though, was 0.24%, and so we were basically within a whisker of this coming in at 0.3%, which is why, if you look at the annualized numbers, they both came in as anticipated. Headline inflation at 3.8%, core at 3.3%. The big thing that I think you continue to get here, remember, 0.24%, you're talking 3.3% year-over-year inflation if you annualize that. Mm-hmm. It's pretty hard for the Fed, in my opinion, to be cutting with inflation running there. Again, core inflation's at 3.3, and this report averages to 3.3. So it's telling you, hey, this report neither improved nor worsened the inflation situation. It's just continuing to move in that range. And the headline number, obviously, approaching 4 and probably will top 4 next month following the release of the May data. None of that really points to Kevin Warsh being able to persuade everyone to cut at one of the next couple meetings.
Yeah, this is the second inflation reading we've gotten for the month of April. The first one was the Consumer Price Index, this being the preferred measure of inflation for the Federal Reserve. When we do take a look out, though, because, again, what we're talking about here is how much this matters to the new incoming Fed chair and the board of the Federal Reserve as they determine what to do with interest rates. Most assumptions for the moment are that they don't move on those rates, but when I do look out to the December meeting, the last meeting of 2026, which is on December 9th, markets, according to CME Group, which has these futures out there, markets are pricing in about a 50-50 chance that rates are higher than where they are now. So, that's not an insignificant likelihood there. I think plenty of people would say, Fed stay out of any action here with an oil price spike because you don't know what's going to happen. But clearly, plenty of people are looking at this and saying, well, based on the commentary from the governors, rates could be higher by year end.
Big thing here, the Fed never goes one and done in either direction.
Yeah.
You look at the cutting cycles that we've seen the last 2 years, it's been 3 sets of cuts. There was a larger one in 24. We started with that 50 basis point cut and then got some 25 bip ones after. But the Fed doesn't like to just do one and then be like, oh, no, we were wrong. If you've got one coming, you've probably got more, and that would need to get priced in. Quick break here, more economic data and Wall Street Watcher next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Some of the biggest estate planning mistakes are the ones you don't even know you're making. At Cushing & Dolan, they've seen it all. Plans that aren't complete, that only rely on a will or lack of funding of a trust. These are the kind of mistakes that can lead to probate, unnecessary taxes, or even putting your assets at risk. As your life changes, so should your estate plan. Marriage, grandkids, new assets, and even changes in tax law can impact how your plan should be structured. That's why Cushing & Dolan created a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It walks you through the most common and costly mistakes and how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
In Massachusetts, summer starts at the farmers market. Longer days, fuller tables, and the best local food coming in fresh each week. Find just packed produce, responsibly raised meats, small batch cheeses, fresh caught seafood, and thoughtfully made goods. It's where neighborhoods come together and local food shines. Stop by your market this season and support farmers and makers across the state. Sponsored by Mass Farmers Markets. Growing farmers markets across Massachusetts. Find your local market at massfarmersmarkets.org.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Consolidating Investment Accounts. Mike, how does someone end up with just this sprawl of different accounts over time?
We've all seen it before with family members or even ourselves, but according to the BLS these days, the average person stays at a job fewer than 4 years. And so imagine you're job hopping from place to place. You might have a retirement plan through there. And all of a sudden, a decade into your career, you could have 2 or 3 different retirement plans just from, changing jobs and taking that next promotion at a new place.
It doesn't even just happen with different retirement or investment accounts. It can happen with bank accounts or insurance policies. You can end up with stuff scattered everywhere.
Well, we all know that, that aunt or that family member that is always scouring for the best CD rate or interest rate on the savings account, or, has some money with this broker and this financial services company. And all of a sudden, you can be looking at a situation where over the years, you have a dozen different places where you keep assets, and that becomes more and more complicated to ensure that your spouse is on there, that you have beneficiaries aligned properly, and that you can actually monitor these things.
Folks, our guide is titled Consolidating Investment Accounts, and there are 2 ways that you can request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. That phone number again is 800-393-4001, or you can request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Well, breaking news this hour after Axios reported that the U.S. and Iran have reached an agreement on a 60-day deal to extend the ceasefire and launch negotiations on Iran's nuclear program. But President Trump has yet to give his final approval. Once again, that according to Axios. Right now, markets are mixed. The Dow is down about 0.1%. S&P 500 is up 0.2%. NASDAQ also up about 0.2%. Russell 2000 is down just over 0.1%. 10-year Treasury yield is down 1 basis point at 4.46%. And oil is up about 0.5%, trading right around $89 a barrel. Some merger news in the casino space this morning after Caesars Entertainment agreed to be bought by Fertitta Entertainment in a $5.7 billion all-cash deal. Meanwhile, cloud data platform provider Snowflake is seeing its stock surge 35% after it raised its full-year outlook and agreed to a $6 billion deal with Amazon to access its chips. Elsewhere, Salesforce logged higher profit in sales in the first quarter. However, its revenue outlook for the current quarter slightly disappointed. The stock is still up by 1%. Dollar Tree jumping 17% after the discount retailer beat quarterly expectations and impressed with its full-year guidance. Best Buy rallying 14% after it beat first quarter estimates, where comparable sales were up 2% year over year. And after today's close, we'll see quarterly earnings from Costco and Dell Technologies. I'm Tucker Silva, and that is Wall Street Watch.
Let's go through some of the other economic data that we received this morning. Probably the least important one, in my opinion, updated Q1 GDP. Remember, we get 3 different readings on this. And the big thing that we have here is that the updated one for GDP growth in Q1 came in at a reading of 1.6%. That was down from the initial reading of 2%. I'm not really sure this is relevant, given that the world is very different now from what it was for most of Q1. And in particular, in the last 8 weeks or so, we've also seen some continued green shoots in the labor market that seem to be improving. So I'm not really concerned about updated Q1 data coming in, worse than originally reported. I think you can kind of put that to the side and say, okay, this isn't something that really matters a ton today.
Okay.
Other things that we received, we were talking about the labor market there. Initial jobless claims came in at 215,000, still a very, very low number. Continuing claims at 1.786 million, still running about 5% below last year's and about 1% below 2024 levels. I got to tell you, we're continuing to see more and more signs that the labor market may be loosening up and starting to see a little bit more activity there. It still isn't showing up as far as, a meaningfully increased hiring rate or anything like that, but it does seem like there is something that's happened in the labor market in the last, really since the beginning of the year, that is putting it on slightly better footing than we were coming in, whereas most of the second half of last year was a steady worsening in the labor market. So I think that we're in a better spot now labor-wise than 6 months ago.
Yeah, going into the year, everybody feared layoffs and higher unemployment. Instead, what we've gotten is very low levels of layoffs and actually an uptick in the pace of hiring. So we'll see.
Yeah. So I think overall, again, if you're just looking at the U.S. economy broadly right now, I think the takeaways that I have, it's really hard for me to see recession happening in the United States at any point in the near future. This is not a recessionary economy when you see the types of numbers that we're seeing from AI CapEx, from hiring, things like that. Housing is basically treading water. It's not contributing to the economy in a meaningful way. It's not subtracting from it in a meaningful way. I think that this is an economy that clearly had, slowed down. We see this with the GDP numbers. If you look at, the quarter-by-quarter ones, it certainly is something that, points to, hey, a slowdown having happened where, remember, Q4, the final number that we got was 0.5%. Q1, we're now at 1.6. So you're talking about, 1% GDP growth for that 6-month period. That's a real slowing that you've seen there. But I also don't think that's relevant to what we are seeing in the last couple months, which is, hey, some acceleration happening in key areas that, to me at least, indicates that a recession is not something we're experiencing now, nor do I think it's something that you need to worry about over the next, 3 to 4 months.
Yeah, frankly, this is an AI economy right now. I know not
Totally.
all of us
You
work
don't have
in
to-
AI.
you don't have to like that,
But this is an AI economy right now, and we see that through, one lens of GDP, where a lot more of it is being comprised from that AI build-out. And I don't know if I said one or A there, but B/2, you are seeing it through the lens of those same companies participating in the AI trade being willing to pay just about anything they have to get it going. And so while normally, an oil price shock would rather concern me, I don't know how much Alphabet really cares about it. I mean, they care, but they don't want to pay higher prices for everything that they are going to use, but ultimately they're going to determine it's worth the price in the short term.
Do we want to talk a little bit about the Fed? I don't really need to do any Fed talk right now. I'm fine with that. Let's talk about what we saw yesterday after the bell. Snowflake, who is a... What do they actually do? Like, how would you describe their business? They're a software company, but...
A whiny millennial? I don't know.
It is an interesting name for a company. It's
a cloud-based data platform company, obviously.
IPO'd, 2-3 years ago now?
Data computer stuff.
They IPO'd... No, Snowflake IPO'd back in 2020. Yeah, 6 years ago now. Wow. Mike, we're dinosaurs. I know. We're dinosaurs. So... they reported earnings after the bell yesterday, and as part of that, on their earnings call, they indicated they're going to be paying Amazon $6 billion over the next 5 years for access to Amazon's Graviton chips inside their data centers. And again, it's something that continues to indicate this demand for cloud-based computing, most likely in this case related to AI applications.
It's also, I think, why it makes headline. If they had bought these chips from NVIDIA, I don't think this is really a story that makes the news. The fact that they're buying Amazon's, which, when did Amazon start even designing and producing AI-related chips? It's not very long ago, and so that's the piece that I think that makes this newsworthy. Is not, Snowflake is buying $6 billion worth of chips? Is that the answer there? Or $6 billion worth of chips? It's who they're getting them from, and the fact that Amazon won this deal over, who are the other games in town? Google and NVIDIA? Pretty much.
Remember, you talk about who else is in this space. You've also got Cerebras, who IPO'd recently, but they're very tiny, kind of a fraction of the size. AMD's playing in this space now. So, again, depending on the specific AI uses, there are different types of chips that may be better. What we're talking about here are what are known as central processing units, CPUs, that are, typically CPU, you think about what powers your computer. Historically, the AMD Pentium chips, and now the Intel Pentium chips, Intel Core chips, things like that. That's a fundamentally different type of chip from the GPUs, the graphics processing units, that originally found their home as exactly that. They helped make 3D images for gaming and stuff like that in your computer. But that kind of processing power was also very useful for AI training. For inference, there's some thought, and inference being AI training is, hey, we're going to load 1.5 trillion different parameters into this model and teach it what to do with them. Inference is, once that model is in, how does it go about then answering your questions based on the parameters it's been trained on. And there's some thought in some, models that might work better with CPUs being used for inference than GPUs.
One funny thing about all, we differentiate, businesses going to Amazon or NVIDIA or Alphabet. Ultimately, I hope everyone knows who actually makes all this stuff. It's pretty much all just TSMC.
Yeah, it's
to be clear, I know everybody's talking about how we're going to manufacture this stuff domestically and Intel's going to do it someday and look at all these new plants that are going up. It's TSMC in Taiwan. 90+% of this type of stuff.
Even though Intel has been getting some interest in their U.S. foundry business, which they basically were like, no, we don't want to be in this anymore. And now that there's not enough supply for semiconductors, they've got companies being like, hey, can we take a look at your foundry business and maybe send you some stuff to build for us?
Yeah.
So we'll see what happens. Quick break here. When we return, let's talk a little bit more about semiconductors, and then we'll talk some World Cup snafus after this.
Subscribe now to our YouTube page, where you'll find daily interviews and full shows of the Financial Exchange. We'll get you caught up on anything and everything you might have missed, right here on the Financial Exchange.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. One of the biggest challenges in financial planning is seeing the full picture. When your investments are spread across multiple accounts, it can be difficult to know how much you actually have and whether your strategy is really working. You might be taking on more risk than you realize or missing opportunities to better align your portfolio. Bringing your accounts together can help create clarity so you can see your total assets, your true allocation, and make more informed decisions about your financial future. Our new guide is called Consolidating Investment Accounts. It walks you through how to get organized, simplify your strategy, and build a more complete financial plan. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide by visiting armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. It's important to update your estate plan as changes occur in your life, or you can wind up with significant issues that may affect your future. Get Cushing & Dolan's new guide called Detour Ahead, Estate Planning Potholes to Avoid. Call 866-848-5699 and get your copy today, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
For many families, an energy bill can mean difficult choices, wondering when or even how it will get paid. It shouldn't be that way. For more than 40 years, Citizens Energy has helped families afford life's basic needs. First, through Joe for Oil, and now through Joe for Sun. A simple way to save on electricity at no cost to you. No installation, no equipment, and you keep your utility company. We keep it simple and help you lower your utility bill. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify.
Sponsored by Citizens Energy.
Our Senators Edward Markey and Elizabeth Warren and Representative Lori Trahan are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network.
The Financial Exchange is incredibly proud to be a partner of the Disabled American Veterans Department of Massachusetts. Nearly 400 runners have already registered for this year's DAV 5K. The event sold out in record time last year, so head to dav5k.boston for all the information about how you can participate this November or make a donation to support our great American heroes. Your gifts help fund free rides to medical appointments for veterans in the nation's first DAV-led housing initiative, providing homes for single veterans and veteran families. Go to dav5k.boston and make your donation today. That's dav5k.boston.
Salesforce reported their earnings after the bell yesterday, and they were fine. I mean, there's nothing like there's like a huge red flag with the current quarter.
Slightly missed the guidance, but nothing dramatic.
Yeah, the guidance came in a little bit weaker than anticipated. And basically what they're saying is, look, we are starting to see adoption of our Agentforce platform, which is their AI-based agents that exist within Salesforce system.
For what? For the layperson out here who maybe doesn't use Salesforce, what is a Salesforce agent capable of doing for me?
So, before even getting there, Salesforce is a customer relationship management platform.
Yep.
So, basically, all of the information about your customers or prospects are going to be in there. And you can have an agent, just as an example, that says, hey, I want to, that when, you click on a button and it generates you a summary of what's going on with, a customer, that whatever data that you want from the platform, in terms of, hey, here are the products that they own, here is your recent conversations and the tone of them and so on and so forth. You could have an agent that does that. You could have an agent that sends emails on an automated basis out of it based on that. You could have an agent that builds reports on a regular basis. There's all kinds of different stuff that you could have it do.
Marketing campaign. These types of things.
Correct. So they did say that Agentforce is now on track to contribute $1.2 billion of annual revenue. That's up from $800 million in February. So it's accelerated at about a 50% pace. It is something where you look at their overall revenue projections, though. Revenue they expect to be $11.3 billion in their fiscal second quarter. Analysts were expecting $11.4 billion. So even with that increased Agentforce revenue, they're not growing as quickly as analysts wanted to see.
The question for a company like Salesforce, whose stock is down nearly 30% this year, it seems to be, look, they've got a massive customer base. Armstrong Advisory Group is a paying customer of Salesforce. Full disclosure here, they are a massive company with a lot of customers. They are going to be cutting edge on design of things. The question in my mind is not can they retain their existing customers and improve services and upcharge them for use of AI. I think they almost definitely can.
Sure.
The question in my mind is if I'm a brand new business starting out, can Salesforce attract me? Or 6 months from now, am I going to be facing the competition from 3 other upstart platforms that are aiming to do everything that Salesforce does, plus 3 other things specific to my industry only at a fraction of the cost?
Yeah.
Because I can tell you from getting marketing emails about this sort of thing all the time, There are plenty of upstarts that I wouldn't trust my data with that are more than willing to build that for me at a fraction of the cost. And the question is, can Salesforce compete in that environment?
With that marginal new buyer.
Yes.
Yeah, that's
right.
Look, no one wants to go through like a database migration. Sucks.
Yeah.
Like no one likes going through that. But if you're a new company that's just starting out and you're saying, "Hey, who am I going to choose?" That's a different proposition.
Right.
And is that something where not just for Salesforce, but all these other companies that exist in this software as a service industry, that's where the questions are coming from. It's not that these companies are going to lose all of their existing customers. It's much more, hey, they've been attracting new customers at a rate of X. Is it now a rate of X minus 10%, X minus 20%, X minus 30% for that new growth because there are new alternatives that might be cheaper and more AI native, like these kinds of questions that are out there.
And Salesforce is an example, but they're an easy example to pick on here, but it applies to HR systems and tax accounting systems and every software that a business might use. There are dozens of different companies in this space, all of which have been under pressure this year under the same thought.
I want to cover this World Cup story. So the World Cup kicks off in less than 2 weeks, which is wild. We're almost there. And here's the thing. Boston is one of the host cities for the World Cup. It's actually Foxborough, Massachusetts. They're not holding anything at Fenway Park just because it doesn't really fit the whole soccer field at a World Cup level in there. But you've got, all these extra trains and buses that are going to be running from Boston out to Foxborough in order to try to manage the traffic. And the MBTA apparently just decided that they've been in consultations with the city of Boston and, other state officials, but the MBTA basically said, hey, we're going to close off parts of Summer Street in order to manage what we anticipate being like 20,000 fans per match trying to ride trains from South Station to Foxborough.
And it sounds like they just kind of exercise some sort of weird eminent domain that they have.
Right. I don't know why the MBTA has, or if they actually do have the power to cordon off a city street without permission from the city.
I kind of hope they do.
Wouldn't you just love if there's like some weird bylaw in there somewhere where it's like, hey, by the way, the MBTA actually has like, eminent domain power over the city of Boston. You're like, who wrote this? Well, Paul Revere did back in the day, obviously, like back when, like the horse trains were running.
So long story short, we seem very prepared for this.
Yeah, so they're arguing about whether or not they can close off part of Summer Street to hold 20,000 people waiting in line for trains.
Can't wait to be there.
Sounds great. Let's take a quick break, and when we come back, we got hour 2 coming up.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up.
Because we have something better.
Stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Our Senators Edward Markey and Elizabeth Warren and Representative James McGovern are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide this month titled Consolidating Investment Accounts. Mike, what are some of the problems that people run into when they have accounts scattered everywhere?
The first one is just difficult to maintain and monitor. I can't tell you how many times I've met with somebody who has a life insurance policy that still has their brother on it instead of their wife or their husband, for example. So it does become really tough to monitor those things. If you're getting to required minimum distribution age, there can be certain rules around where you take money out of specific accounts, and if you miss it, there can be tax penalties. So it just becomes complicated to administer everything.
Despite that, there are still some cases where it makes sense to maintain a number of separate accounts as opposed to consolidating.
Oh, absolutely. I mean, we all know cases where, hey, that new bank is going to give you a better CD rate or introductory rate, and that can be worth real money. In other cases, if you have a retirement plan, there can be special benefits to keeping the money there. Maybe it is a excellent plan with really low costs. Maybe it'll allow you to avoid a required minimum distribution if you're still working into your 70s. Or there can be other strategies too, having money in a retirement plan and allowing you to do what's called a backdoor Roth conversion, all sorts of things that allow you to take advantage of having accounts in specific places.
Folks, the guide is titled Consolidating Investment Accounts, and there are two ways to request it. The first is by calling 800-393-4001. The second, by going to armstrongadvisory.com. That number again is 800-393-4001, or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Tucker with you here, and as we kick things off, stocks finding their feet a little bit. The Dow is up 20 points, the S&P now up 34 points, NASDAQ Composite up 153 points, so about 0.5% for the S&P and NASDAQ, pretty much flat on the Dow. This on the back of a report that dropped at around 10:15 Eastern from Axios, with the headline, U.S. and Iran reach deal but need Trump's final approval, officials say. So that's the headline. I'm going to read just what's here. It's worth reading. U.S. and Iranian negotiators have reached an agreement on a 60-day memorandum of understanding to extend the ceasefire and launch negotiations on Iran's nuclear program. But President Trump has yet to give it his final approval, two U.S. officials and a regional source involved in the mediation efforts tell Axios. The signing of the MOU would be the most significant diplomatic breakthrough since the war started, but a final agreement that tackles Trump's nuclear demands would still require further intensive negotiations. U.S. officials said the deal terms were mostly agreed to as of Tuesday, but both sides still need to get approval from senior leadership. The U.S. officials claim the Iranians later came back and said they had the necessary approvals and were prepared to sign, but Iran has not confirmed that. The U.S. negotiators briefed Trump on the details of the final deal, but he did not immediately sign off. Quote, the president relayed to the mediators he wants a couple days to think about it. So, a few things to take away from this. Number one, it sounds like any potential signing is at least a couple days away.
Meaning the weekend. Yep.
Number two, there's no confirmation of any of this from Iran. And obviously, like, as we've seen through the last 6 weeks, there's kind of this game of telephone that goes on where, quite honestly, sure seems like the mediators are telling one side exactly what they want to hear and then the other side exactly what they want to hear, and maybe something's getting lost in the middle. It feels like that might have been the case a few times in the last month or two. So I am hopeful that something gets done here because I just see the economic consequences building for every day that it does not. The best time to have a deal signed would be yesterday, but today would be good. In terms of these specifics and like what actually ends up being in this, none of us know right now. So and quite honestly, like for our show and our place, like we're concerned with the economic stuff here. I don't know that I'm going to be able to speak definitively on like, well, this is good for like this. I don't know. But what does matter to us on like this show is, hey, do you have stuff start flowing through Hormuz so that the world economy is no longer disrupted? And we'll see if this gets across the finish line. We've said that a lot for the last 7 weeks now.
Yeah.
And forgive me if I just sound a little jaded because even in the last week, there have been 3 separate instances where we've been told a deal is hours away. And those hours have come and gone and it hasn't gotten there. So I'm just... It's not that I'm skeptical that a deal will ever get done. It's more just that I've seen like this exact story several times in the last week.
Right.
And I just need confirmation before I can really get excited about anything.
In the meantime, gas prices have moved down. Oil prices have moved down a bit. We were as high as $110 a barrel. We're now down in the $90 a barrel range, a little bit below as of this announcement. Gas prices back to $4.43 a gallon. That's down from $4.56 a week ago. So, some movement here and there. I continue to get the questions from people that, hey, we're energy independent in the United States. Why are we even feeling this? And I know it's a very basic economic question, but I think people do ask it pretty frequently. Like, sure. I keep hearing that we produce more than enough oil for the U.S. to consume. And the answer remains that it's a global market and a global commodity. And if you're ExxonMobil and if you're producing that barrel of oil, you can choose to sell it to, the refinery here in the United States for $90 a barrel. You can choose to ship it across the globe and sell. I know it's a lot more than that for immediate delivery, but you can choose to ship it across the globe to India for a heck of a lot more. And right now, the market is dictating that you can make a much bigger profit by sending that thing to Singapore or India or many other places across the globe.
I do want to just hone in on one thing. When we talk about energy independence, we're not energy independent from an oil perspective. The U.S., in terms of refined product, needs somewhere in the ballpark of 20 million barrels of oil per day. We produce around 13.5. That still is, double what it was 15, 20 years ago in terms of our production. The biggest thing is we produce by far the most natural gas out of any country in the world with huge exports there. So from the perspective of, hey, overall energy, like when you think about actual energy in terms of, basically like the heat energy that's released by the products that you sell, we are a net exporter there, but a big chunk of that comes from nat gas where we just produce more than we need, quite honestly. Right. So that's
again the better position than a place like Singapore, where you import 95% of the nat gas that you use to heat your utility system or to power your utility system. But it does not mean that what it more likely means is that the United States and a few other wealthy energy independent nations won't be subject to shortages, but will be price takers at the pump and with oil to heat your home and everything else.
Let's take a quick break here. When we come back, let's do a little bit of trivia next.
The Financial Exchange streams every day live on YouTube. Subscribe to our page and follow the markets all morning long. Only here on the Financial Exchange Radio Network.
Hi, this is Chuck from the Armstrong Advisory Group. If your financial life feels scattered, you're not alone. Over time, it's easy to end up with accounts in different places. Old retirement plans, different banks, multiple apps. It's what we call account sprawl. When you've got your money across the spectrum, things can get missed, like overlapping investments, and bringing everything into focus allows you to spend less time tracking accounts and more time making smart decisions. Our new guide is called Consolidating Investment Accounts, and it may offer strategies that can simplify your overall financial picture. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Long-term care costs can reach thousands of dollars per month and can put a serious strain on your savings. The experts at Cushing & Dolan often see families caught off guard by that reality. Without the right plan in place, those costs can quickly eat through a lifetime of your hard work. But here's the shocker. Many estate plans don't protect your assets from those expenses. The right strategy may involve specific types of trusts designed to help protect your assets, but timing matters. Cushing & Dolan has a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It breaks down some of the most common and costly mistakes people make and explains how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Our Senators Edward Markey and Elizabeth Warren and Representative Jake Auchincloss are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
In a heartbeat, you could be the difference.
Mark collapsed from cardiac arrest.
9 out of 10 people who suffer cardiac arrest outside the hospital don't survive.
It took 30 minutes of chest compressions to finally feel a pulse.
Most of the time, it's because no one nearby performs CPR. But together, we can change that. Extraordinary things happen when people take action. A small step, a simple skill, a life-saving moment. HeartWalk brings communities together to create health and hope for every heartbeat. Every walker who joins HeartWalk, every dollar donated, means more people trained in CPR, more research, and more life-saving moments for everyone. Take the first step and register for your local HeartWalk. Extraordinary starts with you. Join HeartWalk today. Find your local HeartWalk at heartwalk.org.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange, and as we know, every month has a birthstone associated with it. Some months have multiple birthstones, like June and August, which have 3 each. May only has 1 birthstone associated with it. So our trivia question today is simply, what is the birthstone for the month of May? Once again, what is the birthstone for the month of May? Be the fifth person today to text us at 617-362-1385 with the correct answer, along with the keyword trivia, and you win a Financial Exchange Show t-shirt. Once again, the fifth correct response to text us to the number 617-362-1385 with the correct answer, along with the keyword trivia, will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mike, we got a piece here from the Wall Street Journal. It's titled, "The Chip Rally," sounds tasty, "is at $5.7 trillion and counting. How much further can it go?" And I have the answer.
Oh, good. What does that even mean by 5.7 trillion? Is that how much the chip stocks have increased?
The cumulative valuation increase.
Okay, got it.
And so, look, here's what we've seen. It's actually completely insane in terms of the recent move. The Philadelphia Semiconductor Index closed on March 30th at 7,084.
March 30th, got it.
It closed yesterday at 12,832. So if you do just some, back of the napkin math, what you end up with is an 81% gain in the last 2 months. And again, this piece here from the Wall Street Journal kind of it buries the lead. It says the semiconductor index has climbed 82% so far in 2026. No, it's done all of that in the last 2 months. And here's the point that I'll put in perspective. During the tech bubble, back in late 99, early 2000, the Philly Semiconductor Index blew out to the top side because, again, at that time, stocks like Intel were the ones going nuts. Intel's been going kind of nuts here as well. What we have right now is the Philly Semiconductor Index is now 67% above its 200-day moving average, which I'm not a big technical analysis person or this and that. But what I can tell you is the only other times that we saw bigger moves relative to its long-term average were in that 2000 move, and there was one back in 95 as well that very briefly got up there too. Good. That is not the kind of company that you want to keep.
No.
It doesn't mean that this can't go further, because in 2000, it went a lot further than this. So you can absolutely see this continue to go parabolic for a little bit here. But here's what I will tell you. The Philadelphia Semiconductor Index is not going to double every month for the rest of your life. It won't double every month for the rest of this year. It probably won't even double next month, but I admit that it's possible because sometimes these little manias just get a little out of whack.
So that's a signal, one that we keep an eye on. The other one that I just like to bring up over and over again are all these other companies that have nothing to do with AI that are trying to have something to do with AI, whose stock prices are just getting bid through the roof. So, for example, I've got 3 of them in front of me here. Ford Motor Company, stock's up 34% over the last 30 days.
They must be selling a lot more cars in the last month.
No, they built out all this battery tech that they were going to use to build EVs, and they're trying to decide what to do with it, and they're thinking, hey, maybe we can use it to help power data centers. So, boom, Ford now an AI company. Your toilet,
my toilet,
made by Toto.
Yeah.
The Japanese toilet manufacturer.
Can we power AI data centers with flushes?
No, but turns out we need porcelain for these semiconductors. So
we do?
Toto, stock up 37% over the last month.
We're not in Kansas anymore.
Corning, how old is this company, Corning? 1800s? Yeah, 1851, founded in Somerville, Massachusetts.
Sure, it's 175 years old.
Turns out we need some pretty specific glass to manufacture these semiconductors. Stock's up 25% over the last month. Those ones I just find, A, entertaining, but B, really concerning that you're digging that deep in the bag looking for these potential ancillary winners to the AI trade, that I just refuse to believe that Ford is going to be a major player in powering the AI data center play.
Yeah, it feels like we're one step away from the Sears brand coming back and people being like, it's AI because you gotta buy drills. Like, it's getting close to that.
Yeah, these again. Maybe Toto is so good at porcelain manufacturing that there is some business for them, but
so is my toilet going to be more expensive if I need a new one?
Well, that's why this whole thing is going to be inflationary, because the AI trade is absorbing all of these raw inputs that go into a whole bunch of other things that are crowding out other spending. This is sometimes what happens with giant booms like this.
How do you make porcelain?
We don't have time to go through that today, Chuck.
What do you mean? I can actually, believe it or not, I can have AI use some of its porcelain to tell me how do I make porcelain. And here's the answer, Mike.
Seashells. They just push them really hard together.
You squish a bunch of seashells together. No, it's made by combining specific clays and minerals and then firing at very high temperatures. So you need china clay, feldspar, quartz or silica, and then ball clay. The classic recipe is 50% china clay, 25% feldspar, and 25% quartz. First, you got to mix them. Put them in a KitchenAid and just mix them up. Then you got to form it into what you want it to be. What do you need it to look like for AI?
And then you got to fire it, which takes all that gas that you
don't
have right now.
No, you got to dry it slowly first to prevent cracking. Because if it dries too fast, it's going to crack. Then you've got to do the firing. You got to get up to 1,650 degrees.
And preheat that oven early.
Yeah, Tucker, get it fired up. Let's get that puppy warming. And then...
Kitchen's on fire.
No, then you've got to glaze it. Okay. And then you got to fire the glaze. Now, for this one, you need a heat of about 2,200 degrees.
Again, this seems really difficult to do with an energy shortage.
And then you got to cool it slowly, not too fast.
Yeah.
You don't want to just, put it out in the snow or anything like that. You got to let that porcelain cool delicately and slowly.
Stainless steel toilets are going to be back in vogue now, just like prisons. Porcelain was going to be too expensive.
It's fine with me. You're just sitting on the thing. Like, I don't really care.
As long as it flushes. I don't care.
Yeah, just make it go down. In any case, this is, at some point, as I've said before, this is all going to become problematic because semiconductor cycles always end the same way. I refuse to believe that we've entered the one time in history where we will always need exponentially more semiconductors than the year before.
Right.
For now we may. For next year we may. For the year after we may. I don't know. But it's not going to be forever because the other piece, there's only so much money to go around to actually buy this stuff. It's not like AI is going to create more dollars just for us to spend on more AI. So at some point this will become problematic. I don't know when that is, to be honest. But at some point this is going to be an issue. Speaking of issues, Google employee charged with insider trading on Polymarket. Guys, I got to be honest. These prediction markets are a real problem.
So here's what this guy was doing. He's an internal Google employee, and every year they have their year in search stuff where they tell you what were the most popular search categories for the year. And this guy seemingly knew what the answers were and bet a whole bunch of money and wagered $2.7 million on bets about what the year in search results would be. And here is, beyond the insider trading piece of it, the fundamental problem. Prior to 3 years ago, if you knew this information, Chuck, would you know how to bet on Google stock because of it?
No, you couldn't do anything with it.
Today, you can make a $2.7 million wager on Polymarket and come out in the green and make a whole bunch of money on it in a way that no casino was taking your bet on this. This did not exist a few years ago, and this is going to continue to be massively problematic, and there's just no good way to police it.
I'm curious how they placed that bet. He said they said that he did it on 25 separate bets tied to this. Tucker, I'm not a sports gambler.
Who's taking the other side?
But no, it's not even who's taking the other side. My understanding is if you try to make a large bet on something very niche on a sports book, they won't let you. They've got very limited maximums for prop bets on how many 3-pointers.
Sure, it depends on the book, but yeah.
Because they want to avoid obvious manipulation of these markets and losing money to someone who has insider information.
Well, remember that the house isn't the other side of this bet, so I'm just not sure they care.
But they have to be at a certain point, because at the moment this guy's placing this bet, I'm guessing that the market for the Google year-end search term is not big enough for him to place $100K at once, which you have to do 25 times. These are not particularly liquid markets.
Yeah. I don't know where the other side of this, the money is coming
from. So they got
to
warehouse it at the beginning in order to, and then sell it off to someone who wants the other side of it. And I'm kind of surprised that they're willing to take that risk in warehousing it for that period.
Anyway, the individual who allegedly did this will be, tried and probably go to jail, but this is just getting crazy now.
Let's take a quick break. When we return, we've got Wall Street Watch and the trivia answer next.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Our Senators Edward Markey and Elizabeth Warren and Representative Stephen Lynch are standing up for radio listeners like us by supporting legislation to keep AM radio in cars. They know the value of local radio in times of emergency. Now it's time for Congress to finish the job and pass the AM Radio for Every Vehicle Act. Learn more at dependonam.com. This message furnished by the National Association of Broadcasters and this station.
In Massachusetts, summer starts at the farmer's market. Longer days, fuller tables, and the best local food coming in fresh each week. Find just packed produce, responsibly raised meats, small batch cheeses, fresh caught seafood, and thoughtfully made goods. It's where neighborhoods come together and local food shines. Stop by your market this season and support farmers and makers across the state. Sponsored by Mass Farmers Markets. Growing farmers markets across Massachusetts. Find your local market at massfarmersmarkets.org.
Long-term care costs can reach thousands of dollars per month and can put a serious strain on your savings. The experts at Cushing & Dolan often see families caught off guard by that reality. Without the right plan in place, those costs can quickly eat through a lifetime of your hard work. But here's the shocker. Many estate plans don't protect your assets from those expenses. The right strategy may involve specific types of trusts designed to help protect your assets, but timing matters. Cushing & Dolan has a brand new guide called Detour Ahead, Estate Planning Potholes to Avoid. It breaks down some of the most common and costly mistakes people make and explains how to help protect your assets, your family, and your future. Call 866-848-5699 to get your free copy today. That's 866-848-5699. Or you can request the guide online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For many hardworking families and retirees, an energy bill comes with an impossible choice. Paying the bills, putting food on your table, and keeping your family warm in winter and your home cool for the summer. But it shouldn't be that way. For more than 40 years, Citizens Energy has made one simple promise: to help households afford life's basic needs. Through Joe for Oil, we help neighbors through the coldest winter nights. Now, we're building on that same promise with Joe for Sun, a new way to save on electricity year-round. Our solar projects are already in communities across Massachusetts and New York, helping thousands of households save money. For many families, that means saving up to 50% on electricity. No installation, no equipment, and you keep your utility company. Like my dad's program before, we keep it simple, helping lower your utility bill through community solar at no cost to you. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify. You've trusted Citizens Energy to show up when it matters most. We're still here, ready to help.
Sponsored by Citizens Energy.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? Simple isn't always always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Time now for Wall Street Watch, tracking the stocks, the data, and the headlines driving markets so far today, right here on the Financial Exchange Radio Network.
Breaking news last hour after Axios reported that the U.S. and Iran have reached an agreement on a 60-day deal to extend the ceasefire and launch negotiations on Iran's nuclear program, but President Trump has yet to give his final approval. Once again, that report per Axios. Right now, the Dow is flat. S&P 500 up about 0.5%. NASDAQ up 0.2%. Russell 2000 is up 0.4%. 10-year Treasury yield down 2 basis points at 4.46%. And oil up just over 1% higher, trading right around $89 a barrel. Some merger news in the casino space this morning where Caesars Entertainment agreed to be bought by Fertitta Entertainment in a $5.7 billion deal. Meanwhile, cloud data platform provider Snowflake is rallying 36% after it raised its full-year outlook and agreed to a $6 billion deal with Amazon. Elsewhere, Salesforce logged higher profit in sales in the first quarter. However, its revenue outlook for the current quarter slightly disappointed. The stock is still up by 0.5%. Dollar Tree rallying 18%. After the discount retailer beat expectations and impressed with its full-year guidance. Best Buy rallying 16% after it beat estimates for its latest quarter, where its comparable sales were up 2% year over year. And after today's closing bell, more earnings on the way, where Costco and Dell Technologies will post their results. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. What is the birthstone for the month of May? That would be emerald. And Eric from Woodstock, Georgia is our winner today. Watching the show on YouTube is our winner, taking home a Financial Exchange Show t-shirt. And we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Couple things. Number one, do you know how many states have a Woodstock in them?
30.
22.
That's close.
Next, Tucker, you mentioned Fertitta Entertainment is buying Caesars.
Yes.
Can we talk about the portfolio that Fertitta Entertainment now owns?
I'll be honest, I haven't heard of them until this morning.
So,
who are they?
Are you familiar with Tillman Fertitta?
No.
Owns the Houston Rockets.
Yes.
Okay.
I know the Houston Rockets.
So that is part of this, along now with Caesars. Golden Nugget, those casinos?
Yep.
Also in there.
Good spot.
The other piece that's just fascinating that's wrapped up in this as well, Landry's, who most people don't know what that is. They're a restaurant group, much like a...
My wife worked at a Landry's once.
So...
Never heard of it.
The restaurants that they own, again, it's kind of like a... who's the big publicly traded one? Darden.
Yeah.
It's that type of setup. Del Frisco's, Chart House, Morton's, the Palm... bunch of steakhouses, and then Bubba Gump Shrimp Company,
Yep,
Houlihan's, They're who own it now. Rainforest Cafe. Ugh. Oh. Like this is, again, it's kind of a weird company that is going to own Caesars, the Houston Rockets, and the Rainforest Cafe all under one umbrella. It's kind of wild. Like you could have a night where you'd be like, hey, let's do the Fertitta night. We're going to go to the Rockets game, and then we're going to go to the Rainforest Cafe for dinner, and then we're going to stay at the Golden Nugget.
I mean, you go to Morton's instead, but yeah.
Well, I mean, yeah, but, whatever you want to do. Piece in the Wall Street Journal trying to... Okay, actually, we got two pieces here that really... Tucker, when I saw these this morning, I was like, oh, Tucker's doing his his thing.
The K? Or the
G.
Yeah.
First, 1 million new car buyers are gone and they're not coming back soon. I don't know what that means.
They're not coming back. They're dead. They're gone. They're dead.
The cars are still being sold, like being like, oh, prices are too high for these people to buy it. Like, I know, I understand that. But that's like saying, hey, because car prices aren't $8, there weren't 200 million cars sold this year. Like, they're still selling the cars they're making. So I just don't know what to do with this. It just seems like useless fear-mongering. The other piece that bothered me, Ed Yardeni, who, again, I like Yardeni's data. His whole shtick is he's always bullish on American stocks, which, look, in the last 15 years, like, how could you say there's anything wrong with that? But he's saying that the economy is not K-shaped, it's G-shaped. And I'm sorry, Ed, we can't do letter shapes for the economy anymore. We can't do numbers. We can't do symbols. Sometimes you just got to use more descriptive things than, like, the economy looks like this letter, because I don't even understand what the G shape means, because he's basically saying, hey, parents are helping their kids to spend money on houses and stuff. Why is that shaped like a G?
No, it's an Arial G instead of a Times New Roman G.
Is it a lowercase G?
I prefer a serif on my G's. I don't want a sans serif font.
Do it in Wingdings, you'll figure it out, all right?
So I don't know what to do with a G-shaped economy, so I'm just going to do absolutely nothing with it.
Yeah, I don't know what to do with all of these stories about the shape of the economy. Or, again, 1 million potential new car buyers did not just die off. I don't know how you're getting to that piece of information. One piece that, again, is being put out there to scare people, I think, more than anything else, as we like to do.
I don't think this part's scary enough, actually.
So more workers are rating their 401ks as average balances fall. So first things first, average balances fell as of March 31st. The stock market was down. Average balances fell because the stock market was down.
Yes.
We're done with that story.
Yes. The stock market has gone up since then.
The pace of hardship withdrawals, they're up. Year over year, they're up to 2.5%, but they were at 2.3% last year. So let's not go freaking out quite yet. The share of workers with an outstanding loan at the end of by the end of the first quarter was 19.2%. Again, we're at 18.8 at the end of a year ago. So I think there's some indications that there's a little bit more stress in the workers' lives right now, generally speaking. I think Fidelity's got some pretty good insight on this. But I will also point out the average contribution rate to a 401k, this includes both your contributions plus your employer's, went up to 14.4%. It's the highest on record.
So I need to get some better data on that piece. That's the one I had a question about, because that does not include employees who aren't contributing.
Right. Yeah. If you don't have a 401k, then you're not counted.
Either you don't have one, or you're at the plan, but you're not contributing.
Mm-hmm.
Like, you're not included as a contributor.
Right.
So that piece matters too. And we still have, I think it's somewhere in the ballpark, like 20% of Americans aren't covered by a workplace plan. Right. And even of the ones that are covered, I think about 20% of those don't contribute.
These days with auto enrollment and auto step-ups, I think that a lot more of them are getting covered these days. Yeah. I think that number has been shrinking. But there's a lot of good news when it comes to the way that we have now set up the 401k system. I love the idea of auto contribution, auto enrollment, and annual automatic step-ups. But we are seeing some of the negative ramifications here too, because what it's clearly leading to is people funneling too much money into their 401k. And believe it or not, that is a thing, right? It can be a thing to put too much into your 401k. One, it can leave you in a precarious financial situation where you need to take a loan or a hardship withdrawal. Two, it can just lead you into a messy tax situation if you actually put too much into your traditional 401k. By the time you're in your 70s, that can end up being a little bit messy. If you have questions about your workplace retirement plan and how to best fit it into your overall financial situation, give the folks at Armstrong Advisory Group a call. It is not quite as simple as just auto-enrolling and sticking it in there. That can work initially, but by the time you're in your 60s, a lot starts to change. The phone number for the Armstrong Advisory Group, 800-393-4001. You can check us out online at armstrongadvisory.com, but that phone number again, 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Let's take a quick break. When we return, Stack Roulette.
Remember, you can watch the show live every day on our YouTube page. We've got market updates and breaking business news all morning long, plus a full archive of all our show's content. It's all there with the click of a button at youtube.com/The Financial Exchange Show. It's important to update your estate plan as changes occur in your life, or you can wind up with significant issues that may affect your future. Get Cushing & Dolan's new guide called Detour Ahead, Estate Planning Potholes to Avoid. Call 866-848-5699 and get your copy today, or request it online at legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, I'm Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts provides thousands of hours of voluntary services at our VA medical centers and soldiers' homes, and is the only DAV department in the country to lead a veterans housing initiative for both single veterans and those with families. These programs are critical to serving our veterans in their time of need. You can help our great American heroes by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Chuck from the Armstrong Advisory Group. If your financial life feels scattered, you're not alone. Over time, it's easy to end up with accounts in different places. Old retirement plans, different banks, multiple apps. It's what we call account sprawl. When you've got your money across the spectrum, things can get missed, like overlapping investments, and bringing everything into focus allows you to spend less time tracking accounts and more time making smart decisions. Our new guide is called Consolidating Investment Accounts, and it may offer strategies that can simplify your overall financial picture. Call 800-393-4001 to get your free copy today. That's 800-393-4001, or you can request the guide at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
For many families, an energy bill can mean difficult choices, wondering when or even how it will get paid. It shouldn't be that way. For more than 40 years, Citizens Energy has helped families afford life's basic needs. First through Joe for Oil, and now through Joe for Sun. A simple way to save on electricity at no cost to you. No installation, no equipment, and you keep your utility company. We keep it simple and help you lower your utility bill. Call 1-855-JOE-FOR-SUN or visit citizensenergy.com to see if you qualify.
Sponsored by Citizens Energy.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
When a heart stops, the clock starts. You are the first responder until help arrives. In that moment, 4 minutes equals brain damage. 6 minutes equals too late in an emergency. The first responder is you. We need you. Will you be ready? Learn CPR. Visit heart.org/nation. That's heart.org/nation.
From breaking news to market analysis, follow the Financial Exchange Show on X and watch the show live every day. This is the Financial Exchange Radio Network.
If you missed any of our shows from this week, you can find them on our YouTube page. We stream the show live every day, but also archive every hour of the show. So if you want to see a particular discussion, go to YouTube, search for the Financial Exchange, and be sure to hit that subscribe button.
Mike, what do you got for Stack Roulette?
42% of homeowners say insurance costs have gone up a lot. And I don't debate this. Estimates, well, according to the BLS, homeowners insurance is up about 7.2% year over year. According to a new survey by the Pew Research Center, they're saying that, they're the ones that said that 42% say it's going up. But according to a published report by the Consumer Federation of America, between 2021 and 2024, homeowners insurance rates are up 24%. My question is, what is the benefit of a Pew Research study asking adults whether or not they feel like homeowners insurance has gone up a lot? We measure this stuff.
Right.
We can just tell you whether or not homeowners insurance has gone up rather than asking 3,524 U.S. adults whether or not they feel bad about the fact that insurance rates have gone up.
Yeah, I don't think anyone here's my question. Who are the 58% of people who said that they haven't gone up a lot?
According to that same group that did the study, most homeowners are exposed to this. Over that 2021 to 2024 time frame, premiums increased in 95% of U.S. zip codes. So everybody has seen their premiums go up. It's a matter of how much. The causes are obvious. Inflation costs, rebuilding costs are all through the roof. We've seen more disasters over that same time period that have resulted in losses. The more interesting study that I see, though, is how state regulations play out and what that actually leads to. So what researchers have found is that homeowners insurance rates in less regulated states, when they experience increases, so due to insurance losses in highly regulated states, those less regulated states see their premiums go up. So if California has a whole bunch of wildfires, oftentimes you will see, I'm going to choose New Hampshire here because I think they have a relatively low-touch regulatory environment for their insurance companies. Their rates get boosted through the roof because that insurance company can't really raise rates much in California. So what do? They make up the profit elsewhere. And so that piece I found interesting. It has not really happened the other way around, right? You don't see disaster in New Hampshire causing rates to increase a whole lot in Florida, for example.
I want to talk about what Robinhood announced yesterday, which is that they are unveiling AI agents that can be instructed to rebalance portfolios, monitor themes, or execute trading strategies automatically.
Yeah. They also, for some reason, are talking about how they can use these same AI agents to complete purchases for you of like retail goods using your credit card. So,
yes.
Hey, I want to buy this, wait until it goes on sale, and then just buy it for me. And, yeah.
So, I can tell you a couple things about this.
Okay.
Number one, there are a whole bunch of plaintiff lawyers that are just licking their chops right now. Because you know that someone's going to do something stupid after signing up for this and then sue Robinhood for doing something stupid. And Robinhood's going to say, well, you signed this agreement, indemnifying us from any responsibility from what your AI agent
Which you do, by the way. So
I'm sure you will.
I did read I went and pulled the terms of service and looked at them, and it's very clear that if your AI chatbot executes a trade that you wouldn't have done, you are fully liable for it. No ifs, ands, or buts.
Either way, there's going to be lawsuits because of this.
No doubt.
The other piece that I know is that if there is one way that you can consistently make money in the trading business, it is by making money just handling that flow instead of trying to make money buying low and selling high. And the reason why Robinhood wants agents trading is because it's going to mean more trading activity on their platform and more revenue for them.
Yes.
Like the cost of them operating an agent is going to be negligible compared to what they can make from the extra flow they get from that agent trading when you would not be.
Right.
And it's not going to inherently produce better outcomes for traders because you're still telling it what to do. It's just it's doing it for you instead of you doing it yourself. And I get it. Like, Robinhood's going to make, a boatload more money because of this, I bet. But I'm not sure it leads to any better outcomes for people.
Here's another question that I was thinking about. So one of the big risks that researchers have identified with these models is, once you put your information into them, it's pretty clear in a lot of cases that information's out there and, the models are training on it and it can potentially be discovered and hacked into it and used in all different ways. If I'm currently trading on Robinhood and I'm not using an AI model, then I know whatever it is that I've personally researched, and I don't know, what the next Robinhood trader is planning on doing.
Sure.
If I and a whole bunch of other traders feed our plans into an AI model, what happens? Like that?
How do I know that Robinhood won't trade against me?
Well, Robinhood might trade against me, but that AI model suddenly has non-public information, right? If the AI model potentially knows what all of these other traders are planning to execute, then that's material non-public information, and I really wonder how that's going to all work. I mean, perhaps the AI model has trained itself pretty well, but and I'm not talking about a retail customer, but let's say that we're one of those big market makers is using the same model,
Citadel,
and suddenly has their trades lined up into this thing, and the AI model that's servicing Charlie's account suddenly kind of looks at that and says, okay, there's a big demand coming for the XYZ security. Is it really well trained enough to know not to trade on that inside information? It is an inside information.
Here's any source of alpha is non-public information.
Yeah.
The illegal kind to trade on is material non-public information,
Right.
like information from public companies where X and blah blah blah. But any source of alpha is private information that you have a model for this and that is there's no problem with that. But the question that I think
the one that I think about is if the AI model knows that an executive at a company is trying to unload a bunch of their shares because they're using the AI model to trade it, and then executes your trade based on that knowledge, that's material non-public information.
But they wouldn't, a senior person wouldn't be able to do that. They've got lockups and disclosures anyways.
Yeah.
So I'm not sure that's a piece. But the question that I would have is, okay, I'm telling this model, here's how I want to trade. How do I know that, the metadata from that model, not me, but, hey, how do I know that my plan isn't being sold to some other broker who wants to take the other side of that trade?
Yeah.
I don't know what you're going to do with it.
Yeah. It's going to end very messily, but it's not very predictable how that's going to happen.
What's going to end up happening is it's going to be wild when AI actually ends up killing the internet because no one trusts it anymore.
Yeah.
It's going to be one of two places. This is going to go like streaming did. Everyone's going to be like, oh, this is the golden age. It's so easy. Look at how cheap it is to do all this stuff. And then 10 years from now, it's going to be like, the internet died. Oh, well, we saw it coming here. Let's take a quick break for the rest of the day. We'll be back tomorrow.
For Good Friday show. Not Good Friday, but a Friday show that will be good.
Well, it'll be okay. We can't promise good, but tomorrow will be okay-ish. We'll see you then.